Jim, good to have you. You know, I'd love to start, if I can, with you with Russia. We heard from President Zelensky about an hour or so ago, asking for even more in sanctions in terms of closing ports, saying peace is more important than income. But given your knowledge of the Russian economy, I'm just curious to get your thoughts. How effective have the sanctions so far been, and what are your expectations when it comes to that economy and its ability to continue to function?
Well, I think Putin has not shown any evidence of being the great strategic thinker that so many people tried to persuade me in the heyday of Russia as a brick in the noughties supposedly had. He cannot have envisaged the freezing of the central bank assets, as well as the huge response of Germany in terms of essentially changing the whole of their framework for defense policy post Second World War II and the aftermath. And so I think he's probably floundering. I don't know whether you guys have picked up the subtleties of it, but there's some talk, obviously, coming out of Ukraine and Russia and elsewhere in Europe this morning of more seriousness about the bilateral talks going on. And much of what you find when you explore what's below it is the Russians are really struggling to make any serious progress in the military side of this attack. And that sort of feels right to me. Now, I quickly add that I'm no geopolitical expert on military matters or security matters. And as we've all found out the past month, who knows what's going on with this. But it feels to me that those sanctions are playing quite a role in putting Russia on the back foot. As Martin Wolf has written in the FT today, if you look at it on a purchasing power parity basis, the Russian economy is now smaller than Poland. And certainly, given the ruble, Russia is nowhere near what they would have hoped it would be 20 years ago when I dreamt up the whole BRIC thing. The way things are going, it would be lucky to be in the top 20 economies in the world in another few years. So they cornered himself, in my opinion.
Well, one of the more extraordinary things, and there have been quite a few when it comes to the economic sanctions, is they're preventing him from using these foreign reserves that he built up significantly, foreign exchange reserves. Give me your thoughts on that, what the impact is going to be, by the way, not just on Russia, but perhaps on other emerging economies as well, in terms of how they think about building up foreign exchange reserves.
No, I mean, there's so many extraordinary things about all of this that time will tell, but I actually wrote something about two related aspects to this. That, first of all, I would imagine the Chinese must be secretly furious with Putin about this, because it's made it clear that this is the sort of thing Western policymakers can do. And of course, with the never-ending discussion about Taiwan, it must be forcing the Chinese to think, well, this is the sort of thing that could happen to us. And there's one thing for the Chinese to think that through on their own terms, but having to forced to think about it because of some external country is probably another. The second thing, which I find myself thinking about in terms of the US rate market, and just picking up on the tangent of what Steve was saying, it probably at the margin might mean the end of the never-ending build-up in foreign exchange reserves by so many emerging economies, which has sort of been the philosophy ever since the Asian crisis of 1998. Now, if that were true, another problem the bond market's got, and possibly the Fed, is that would pull the plug of the whole savings argument that's gone with that for the past 20 years. So it's not surprising that the bond market, fascinatingly through all of this, appears to be continuing to, at least on a trend basis, weaken. And there's so many cross currents going on here. It's sort of intellectually fascinating, but very difficult to fathom out.